But I look at PayPal and go, hey, this is a company that's growing. It's a company that's trusted. Like, I don't talk to many people who say, yeah, I don't trust PayPal. I don't think I've ever heard that. All right, guys, PayPal. This is a great company. Big fall in stock price. I've been a fan of this company for a while now, waiting for the price to fall. Let's pull it up on our software. Now, guys, on February 9th, PayPal is going to report. If you're a follower of PayPal, you got to subscribe to the channel. If you're just a follower of investments and you're a little concerned about what's happened last year, we are your voice of reason. We're the guys who are going to teach you the process where you'll actually enjoy seeing a stock go down. We love seeing stocks go down. That might sound counterintuitive to you, but that's all the more reason why you should subscribe. If you subscribe and start listening to one of our 2,000 videos, you will understand that stocks going down is a good thing, especially when you understand how to buy a stock. All right. So look at PayPal, Mo.
It's amazing to look at all these market caps. $91 billion.
And it was, so the all-time high was July 26th, 2021, 310 a share. It's now at 80. It hit a low of 66.
Amazing.
So the 5-year chart right now, it's now in the negative for 5 years.
Yeah, that's crazy.
So in 5 years, it's made, but look at this. Look at the last 5 years. It's doubled its revenue, basically. 15 to 27 billion. Let's look at the profit.
The cash flow.
Actually, the profit's exactly the same, basically.
The cash flow is nearly doubled in the last 5 years.
Really?
Yep. Look
at that. Oh, yeah, you're right. So
everything's getting better.
What we're here to do is, go ahead.
Except for the profit, which is staying the same.
Now, I look at PayPal and I think to myself, here's a company that has a lot of trust. They have Venmo, they have PayPal. Whenever I'm buying something, I use PayPal to buy it. Like literally, I would prefer to use PayPal and use my credit card through PayPal than it would be just to buy the credit, use it through a credit card.
A little backup system.
They're very pro customer. They're very pro on reliability and security and safety.
I think I've had 2 or 3 disputes over my whole time of using them, and I've never had an issue. I've won every time.
Yeah, I'm assuming you're not going to take advantage of them.
Yeah.
So let's take a look at the 8 pillars for PayPal. All right, apart from its earnings, now look at this. I do like this, that they're showing a lower earnings than free cash flow. So remember that the 5-year PE is 30, but the 5-year price of free cash flow is 20. They're showing a higher cash flow than earnings. And this is something I see like with Visa, and I think American Express, a much higher, over long periods of time. For example, if a business starts and it ends in 10 years, the earnings and free cash flow should be the same. But over long periods of time, some businesses do a better job. One of the red flags is when free cash flow is lower than earnings. In this situation, it's higher. Yes, the ratio is lower, but it requires a higher free cash flow. I don't want to get into the dynamics of it, but let's look at it this way. In the last 5 years, they've averaged $3 billion in earnings, according to our software, in the last 20 quarters. But look at the free cash flow, $4.45 billion. All right, so I like when they report a higher free, because earnings are easier to manipulate than free cash flow. Right. All right. Now, one thing that's dropped that I don't like, I'm actually surprised by this return on invested capital of only 10%.
Yeah,
I thought it'd been higher.
I thought it would be higher too. Enterprise value to market cap there's a wide gap there too.
Oh yeah, there's a lot of debt for the company.
Yeah.
Okay. So there are some issues here, of course, but there's always going to be issues with any company. There's no slam dunk. Oh, no. But I look at PayPal and go, hey, this is a company that's growing. It's a company that's trusted. Like, I don't talk to many people who say, yeah, I don't trust PayPal. I don't think I've ever heard that. Venmo is still way more popular than Cash App.
And Zelle and all that.
Yeah,
Zelle's popular.
I think Zelle is more popular.
Because they tie it to your bank.
Well, so does Venmo.
Oh, do they?
Yeah.
No, I mean, I thought it was like owned by Bank of America or something.
Oh, it might be
Zelle.
US Bank, something like that.
Something like that.
Here are the global users number from PayPal from first quarter of 2010 to third quarter of 2022. Look at this. They had under 100 billion. This was 100 million. Let's see here. The exact number was 84.3 million active users and now 432 million active users. That is over 5 times growth. Now, does that mean it's a shoo-in? No. However, the more sticky, the bigger and bigger it gets, the stickier and stickier it is.
Yeah.
With
it seems
Venmo,
like the growth has slowed, but they've become sticky.
The growth has slowed. But as the world gets better and better and more economically independent and more countries become more wealthy, look, we still have India, China, and Africa. And obviously China, Asia is much more economically developed than India, who's more economically developed than Africa. But as these get bigger and bigger and bigger, hopefully their users, when they get bank accounts, will start using the thing that everybody in the world uses.
And Venmo just went to Amazon. So you can use Venmo on Amazon
you were always able to use
PayPal
with Amazon, weren't you?
Not Venmo.
Oh, wow.
Yeah.
I love Venmo.
That's great. I use it every day.
I literally use it. In fact, it gets a little frustrating when times it's like, hey, you've done too many transactions. I'm like, F you. Oh, yeah. Well, I pay everybody. I mean, I literally pay everybody through Venmo. Wow. I literally have made people just start a Venmo account saying, listen, if you want to do work for me around my house, you got to get a Venmo account.
I remember the first one.
Oh, that melted her brain. It melted her brain. I was like, just ask one of your kids. They'll take care of it for you. And sure enough, that's what she did. And her kids set it up for her. And now she uses it all. And now they have friends on there and they have pictures. I'm like, isn't that weird? So anyhow, let's look at analyst estimates for PayPal. Now remember, I don't take analyst estimates as diehard true. This is it, done. But pretty solid growth here.
Yeah.
A lot of growth here. Mid-double digit growth in EPS over the next 3 years. But look at revenue, not as much growth. Still growth here, but only 20% over the next, not even 20% over the next 3 or 4 years. Still reasonable. And as time goes on and the world becomes your bank, to me, when you're banking on PayPal, you're banking on the world.
Yeah.
You're sitting there saying, hey, is this going to be the #1 provider of payment processing in the world? The answer is yes. Then you're just banking on the world becoming more and more economically developed. Right?
Yep.
So let's take a look at Stock Analyzer tool to determine what a reasonable price is to pay. So as you know, there are 3 questions I ask. And if you're new to the channel, I ask this for every company I look at. 1, do I think this company will be around for the foreseeable future? Mo, what do you think?
I think so.
Okay. 2, do I think revenue and profit will be higher in that foreseeable future than it is today?
I think it will.
I do too.
Yeah.
3, can I pay a reasonable price today based on those assumptions about the future that gives me an adequate return on my money?
I don't know, but we'll find out right now.
Right. So that's the hardest question to answer yes to. That's what we're doing here as investors. Remember, most investors will just look at number 1 and 2 and say, oh, yes, I'm going to buy it. No, you can overpay for a good thing. And that's why the 3rd question is the hardest one to answer yes to.
That's really what 2022 proved to a lot of people.
Yeah, guys, 2022 was all about, even Uber came out and said, hey, the world's shifted. We need to start focusing on free cash flow because that's what matters.
Yeah.
So we use our Stock Analyzer tool to look at the cash flow of the business, not the balance sheet, the future growth in revenue, profit, cash flow, and some sort of multiple to determine, can we pay a reasonable price today for the company, giving us an ample margin of safety? So Mo, do you want to do 10 or 20? You do 10, I'll do 20. Okay. I think that's becoming kind of our MO.
Yeah, I think so.
So I'm going to look at a 20-year analysis. In our software, you can use 1 all the way to 20 years of analysis. And this thing is the most popular part of our software. Over 1.3 million uses of this last year alone by our users. Okay, so if you're interested in the software, the 8 pillars, all this, plus our community of thousands of people talking about investments, go to everythingmoney.com, check it out. It's less than $1 a day. And we have a money-back risk-free guarantee, so check it out. All right, so I'm going to do some analysis here. I'm going to go with... when you go out 20 years, it's a lot harder because...
Yeah, it definitely is.
I mean, that's a big revenue growth number. Well, we'll see.
I can't believe their PE is still 40.
What do you mean? Oh, it's still 40?
Yeah.
Oh, wow, you're right. Well, they had a big drop in profit,
That's true. That's true.
They had a big drop in profit margin, not relative. And we'll look at that here shortly.
I don't know. I haven't scrolled down and looked at my prices yet.
Okay.
And frankly,
so
I don't remember.
So I'm doing this, and I've gone back and forth on this a couple of times.
I was going back. Wow. Okay. I was going back and forth, and you have higher numbers than me on revenue growth.
Oh wow, really?
Yeah. I almost went with your same numbers.
So
but then I tapered it back.
Now keep in mind, in the 20-year analysis, my revenue growth, my highest number is 12% a year. That would take the revenue 10x from today.
Yeah.
That's a big jump. Mm-hmm. But I look at it going, can I see a world in which that happens? Yeah, 20 years from now, as the world grows and grows and grows and has, look at where China was 20 years ago versus today. Mm-hmm. Look at where India could go, it was 20 years ago versus today. Look at where Africa was 20. I look at it going, is that possible where we could see this become? Sure. Is it probable? No, that's why it's my highest assumption.
That's why you have a low end of 4%.
My low end's 4%. Like I look at it going, man, they should be able to get 4% all day long, just staying. If they don't ever add users and the world stays flat, just with inflation, and they should be able to get 4%.
Yeah.
Okay. Yep. Profit margin. So what'd you do? You did for growth? What'd you do?
6 and 9 revenue growth.
Yeah, I think that's very low. But again, I don't blame him, because what if we have a recession that's a little bit longer, et cetera, that could cause a problem. Profit margin, what'd you do?
7, 10, and 13.
Oh my Lord, Mo.
I ran the gamut.
Mo, hang on a second.
They've been all over the place.
No, they haven't.
I mean, this one year has been
Yeah, but look at 5 and 10 years. 5 and 10 years was 14.5 and 14.5.
But with the competition that's coming into this space, there's a lot of competition in this space.
What's the competition?
Apple Pay,
But
Amazon
they're not doing
Pay.
I get that, and Apple Pay's been
Google
around for
Pay
how
has-
long? My take on it. I still use, this is me, I use PayPal over Apple Pay. 2, Apple has so many, PayPal is focused on we're doing financial transactions.
Yeah.
We're dedicating our team. If you have an issue with your iPhone right now, what do?
Go to the Apple Store.
Yeah. Okay. So if you have an issue with Apple Pay, where are you going?
To Goldman Sachs.
I mean, that's what I mean. Where are you
call the
going?
number?
Like with PayPal, though, I know
I will say
exactly
they
what
have
I'm
great
doing.
Customer service. Apple Pay. I will say that.
Do they?
Yeah, they do.
For what?
For transactions, I've had to contact them before.
Okay,
And they
good.
answer just like that.
Good.
Yeah.
With PayPal, I find the same thing. I look at this, and maybe I'm biased. Of course, I'm screaming some bias here.
I do actually. I find it harder to contact PayPal than to contact Apple. But
Really?
I've only done it once. You get through to PayPal every time. Don't get me wrong.
Oh,
But
okay.
it's faster to get through to Apple.
Okay.
But-
All right. I think he's being too conservative. I put 12, 14, and 16 because I look at 14.5. It's kind of like, okay. And as they grow, by the way, what's their gross margin? Let me look at their gross margin here. It is 50%.
51%.
So as they grow, are they going to have to add more and more overhead? No. I think this profit margin could actually be higher than 16%.
Wow. All right.
You know what I should do? I should make it 10, 14, and 18. Because, Mo, think about it. If they double their transactions tomorrow, do they need to double their overhead?
No.
Probably not, but they're going to add 50% to their bottom line.
Okay. I'll change it for you.
You don't have to, but I'm just saying, like, that's the way I view it.
Let's put 8, 12, and 16 and see what happens.
Good boy.
I haven't seen the numbers, so I don't know.
Now, free cash flow.
19, 21, 23.
Okay, I'm going to do 18, 22, and 26. Because, again, same assumptions here. If they grow at the rate they're going to do, they're going to have a much higher profit margin and gross margin. Right?
Mm-hmm.
PE.
14, 16, and 18.
15, 16 and a half, 18.
Okay. And price to free cash flow I did
Same
the same
thing. Now, what did you do for desired return?
12, 15, and 18.
I did the exact same thing.
All right.
The current price is 80. I have it on my watch list at 60. Again, that doesn't mean I'm buying it at 60. It means I want to buy it, start selling puts at that price. And remember, guys, when I own this stock someday, it doesn't mean you should go out and buy it. You need to do your own independent research. I'm here to teach a process, not tell you what stocks to buy. I'm here to teach you how to fish, not give you fish. If you're just looking for somebody to give you fish, we're not the channel for you, and that's okay. But you're probably smarter than maybe you even give yourself credit for. Learn the process because it's a much easier way to live your life.
Yes, it is.
So, analyze. Boom. All right. Wide range here. But look, low price of 30 to 55, high price of 77 to 112, mid price of 50 to 81. Okay. So I'm looking at this saying my watch list price of 60 and trying to buy it below 60 probably makes sense because it gives me this area right here.
Yeah.
And I think I'm buying a high quality company with staying power.
25 to 56, 55 to 80, and middle ground 40 to 65.
Now I want everybody to realize the reason our numbers are just so different for multiple of earnings and just kind of cash flow. Look at the margin
Right.
on profit versus free cash flow. It's a lot different. So that's why you have a big difference there. But at the end of the day, free cash flow matters the most.
Mm-hmm.
So guys, if you like this video, please subscribe to the channel. We do 14 to 20 videos a week. We have over 2,000 videos in our arsenal, and we were not the guys promoting the hype back in the day that all fell 80, 90% last year. And when we do buy stocks that fall a lot, we bought them after they've already fallen a ton and then go from there. So thanks very much. Don't forget to subscribe. The more you learn, the less you fear. There are 3 things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?